Howdy folks, back here in Whitsand and looking at the markets, and you can see the scenery behind me. It's absolutely beautiful, magnificent. Just endless stretches of beach and sand and waves. It's absolutely beautiful. But let's talk about the waves in the market right now. I'm going to start with the currency market. And just to reiterate what we covered in yesterday's very long and extensive live stream, I'd encourage you to have a look at that, and I will link that at the end of this video. I don't want to repeat everything in every video, and sometimes I refer back to the lengthy, more detailed videos, which go into obviously more detail. But here we are. So we're long on the euro, and that's moving up a little bit, generally in line with my idea that the dollar index has to move down, that we will see, along with tariffs and various other sort of stimuli, including the bond market, that the dollar index will move down. And I think we could get down to about 93 on the dollar index, which will push the euro up to about 118, 1.18, and maybe even 1.2. So that's the only trade we have on the majors right now. I wanted to get short on the dollar yen, as you know. I rue the day I missed on this trade, but it's one of the ones that I've been trading quite a lot. But we missed out on that one, unfortunately. Big spike up through the trend line. We didn't sell at the trend line because we went through it. And we didn't get to the 200 and the 100 period moving average confluence and the Fibonacci. It's the 50% retracement or the 618 Fibonacci. So we missed out on that very, very nice trade, unfortunately. But we do have a short on the euro yen, and this one is moving down in our favor. It's taking its time. It's been here for a very, very, very long time. If you think a bear flag should work out pretty fast, well, not always. This is a bear flag that's been going on since August 2024. We're now in May 2025. I'm still waiting for this move down. We've broken that tiny little trend line. We are making fractionally lower highs now. Even though we poked up above there, we're still below that big spike up through the top of the range. So we continue to hold this for a target of 144. It's a pretty long-term play, and it's an expensive one because there are overnight carry costs because of the interest rate differential. It's narrowed a little bit because the euro zone has dropped their interest rates and the Japanese zone has increased theirs. But it's still an expensive carry trade to be on the other side of. In the end, though, the market should pay us off if this does get down to 144. I'm also looking to buy the Aussie and waiting for this pattern to form and play out. And as I said, and I've repeated in my private group and also on YouTube and so on, that the market likes symmetry, and we'll only be symmetrical on this pattern as sort of a curly bracket, or even a head and shoulders, you could look at it like that, but we need to get a little bit further along. So we haven't bought just yet, but I will buy a breakout above 0.65, and I will look to buy on dips if we get back down to this trend line. You can see these two black dots on my chart. Those are my trade alerts, price alerts, and if and when we get to the top and break through there and hold above there, I'll be looking to buy, and if and when we get to the bottom, I'll be looking to buy at that trend line. So that's where we are in currencies. Not a great deal moving there right now. Now, going across the stocks, we're still short on the NASDAQ and the S&P. I put a fairly controversial tweet out this morning just saying that my target for the S&P, and I used the other chart, let me just show you. So this is the weekly chart directly from the index, and my target is 100 period Bollinger Band and the 618 fib, the golden ratio, the golden pocket. This would be a normal correction, and I also posted this up on X, this chart, and I'm looking for a pullback to the Bollinger Band like we've seen on multiple occasions. The lower Bollinger Band, this is the 100 period Bollinger Band, over there, over there, over there, over there, almost over there, and now I'm aiming for that lower Bollinger Band. Notice that we've got a Bollinger Band expansion, and we're not in a squeeze phase, so we need to enter the squeeze phase. In other words, volatility needs to drop off, and we need those Bollinger Bands to contract. And very often when that happens, the lower Bollinger Band moves up, the top Bollinger Band moves down, and we should meet somewhere at the lower Bollinger Band. That's, of course, if we do have a bear market on our hands and we have reached the top. So that's my idea on the NASDAQ. We're short on the NASDAQ, short on the S&P, and short on the German 30 for similar reasons across the board. And here's the German 30. This one's a little bit more technically interesting because we've reached a new all-time high compared to this period earlier in the year. After bouncing off the bottom of the channel, we've now reached the top of the channel quite perfectly. This channel goes on for about 2 or 3 years now, and we've now got to the top. Every single time we got to the top or the bottom, we've reversed course. Doesn't mean we're going to on this occasion. Nothing is ever certain in the markets, but let's see if we can get that. But we have no other positions on apart from that. I'm looking at QBTS for a pullback down into this gap break, maybe to the channel top here for a bounce. I've got these arrows drawn in, and I'm looking for this path to form. I have a very, very tiny long position on right now at about $15.50, and I'll be looking to buy into that dip all the way down to the channel top. If we fail that channel top and continue to move down, particularly the 20-period moving average, you can use that as a guide too, then I'll have to exit that trade. But I think this looks great. It's an interesting play, and we'll see how that goes. Go and do some research on QBTS, see what they do in their quantum cloud computing stuff and chips. It's a pretty interesting and fascinating field. Going across to Bitcoin, new all-time highs, on track now, added a new tranche at 110. Not much else to talk about on this chart really, so let's not talk too much about the other cryptos. But there we go, breaking up through that trend line eventually and making a new all-time high compared to the previous all-time high, only fractionally, but we added on that break and close, we added a new tranche. There's the crypto Moab. I said months and months ago, once we broke up above there with a very strong thrust movement, we were on our way to new all-time highs, and we've got there. So well done for those who held on, bravo. I've got a heap of Bitcoin on here now, and I've just added some more, and I'll continue to add on the way up. I've covered this in some detail in the previous videos, so please check out the previous live stream. Once again, it's really important that you at least watch those if you can't attend them, because I do try and go into more detail and answer questions. We're also short on gold, looking for a target of down to $3,000, maybe a little bit above, maybe a little bit below, and at the extreme we could get down to 2,700, 2,800. I'm repeating the same mantra that we've had over and over again. I might even look to add some short positions onto my gold trade, but right now I'm not convinced either way. I'll wait for the end of the week. But we do have a long position on silver to offset, counter, or hedge partially, even though it's a different instrument, hedging that gold short. There's our position long, and that's in profit. And our short position on gold is also in profit. This is now the fourth time that we've done the gold-silver hedge switcheroo and managed to profit on both of them at the same time in opposite directions. Very strange. Right, natural gas. We're short on natural gas. We're short on WTI oil. Now, normally I'm not short on both of these at the same time. They generally tend to move in opposite directions, but it's again a little bit of a hedge position. However, they're both moving in our favor. I'm actually trading the continuous ETF here on natural gas, not the futures. My broker rolls over today, so I'm trading the continuous contract until next week. There's our last entry. I posted this up on X and on YouTube and in my members area, of course. We got long at the bottom there, if you remember, hedged there, and now we're short. We took profit on the long, got rid of the hedge, doubled up on that, and now we're short for a move back down to the red line. That's where we started off from in our long trade, back down there, and then down to the top of the green block, and then down to the bottom of the green block. That should take us all the way down to 2.88, 2.9, something like that. But $3 is the first target. If we manage to break and hold below 2.88, 2.89, then we should see a target of 2.5, and that's the next step. But I do think that we're in a new range on natural gas, and it's much more likely that we'll bounce off $3, roughly $3, 2.9, 2.8, and head back towards $4. And I think we're in a new $4 range, $3 to $4 range, because of various factors, including an increase in base load demand. And I'll refer you to people like Energy Rogue, Brian and Bill over there, to give you more details on what's going on in the natural gas market in terms of load, in terms of LNG, in terms of supply and demand, all sorts of new demand, fresh demand for natural gas. And I think that'll keep us in the higher $3 to $4 range rather than the lower $2 to $3 range that we've become accustomed to over the last couple of years. So that's natural gas, short on the continuous ETF. I'll be looking to get short on the futures from Monday onwards if it all still looks good. We're also short on WTI oil. Big spurt moved down this morning. You can't see it so easily on the day chart, but on the 4-hour chart and the 1-hour chart, you can see we got a bit of a go. This is the 1-hour chart. We broke below the 100 and the 200 period moving averages, broke below the order block. We switched to the 4-hour chart. It looks pretty bearish as well. Just reaching that 100 period moving average though, but breaking below the 200. We've got to get through that low right there to get further down. So I'm short on WTI. This is back to the day chart. And once again, like natural gas, in a new range between $3 and $4, I think WTI is in a new range between 50 and 70. So natural gas has moved up one level, WTI has moved down one level, and we're looking to trade within this range. We could get all the way down to $50. We do have a double bottom spike low here, which has to be overcome. That's pretty powerful. It looks to me like we're going to be faffing around in this range, not quite reaching the bottom, not quite reaching the top for some time to come. Anyway, I drew this red line in some time ago, a long time ago now, and my entry area where I thought we might get short, and the time of that is at the end of this month, 30th of May. That's where my red line starts moving down. And this is a thumbs up. It's just a supposition. It's not real. It's all made up. But, you know, sometimes my drawings are quite accurate. And I think if we could get there somewhere around the end of the month, early in June, we could then start to move down. In the meantime, we might have to sort of spider across the page a little bit longer. So short on WTI, short on natural gas. And we're still long on URA and UEC. No changes on that. And I keep on saying this is a slow, squiggly, zigzaggy sort of trade. Pretty boring, not much to say on it most of the time. We are in excellent profit. Let me just show you URA, for example. And there's our entry position a long time ago now in March, the end of March. We got in at 22.90. We're currently trading at 28.20, 28.30. So a very good profit on that one. UEC, not so much, coming off a little bit, but we got long at $4.70. We're currently trading at 5.30. So also pretty good. Now going across to the 10-year yield and TLT, treasuries continue to drop, yields continue to rise. Don't know what else to say about that. It's just, is there going to be some intervention? I don't know. All sorts of things are being talked about in that sphere, but I don't know. Now today I'm talking very technically. I'm not talking about the background, ideas, the fundamentals behind all of this. We've got the natural gas storage report, by the way, talking about fundies. And I want you to go and read the comment I put on X, the tweet that I put on X this morning regarding the storage report. If you haven't read that, haven't seen it, go to X, read my comment on the storage report. That's what I feel about it, and I'm going to move on and talk about other things. So TLT, well, we're long. We're long from 88. We're now trading at 83. Probably going to have to ditch that trade again. We've been in this trade 2 times now, long, and we've got out at break even on both occasions, having got frustrated and bored with the whole thing, and we may have to do that again because it's just not moving up, is it? So there we go. VIX ticking up a wee bit, and as we see the stocks move down, I'm not saying this is going to be sustainable. This is the way we're trading at the moment, but the VIX seems to indicate that there's at least some idea or interest that these markets might move down. There's the S&P, there's the NASDAQ. I'm not taking a long position on VIX just yet. It's not my favorite spot, but I guess if you draw a trend line, the VIX doesn't really respond properly to these sorts of technical levels most of the time. But if you look at that, it's pretty convincing that we have a bottom here against the trend line on VIX. VIX trades across the page. It's a sideways thing with occasional spikes up, pretty much like natural gas in many ways. But yeah, so trend lines don't really play much role or make much sense. But we do have a trend line, and we are bouncing off it. But I'd rather get back down to these much lower levels, around 12 or 13. That's normally when I start to look to buy VIX, and not before then. And you could buy a little bit now, but you're going to have rollover costs, carry costs, and so on, and it's just not worth it. So wait for the lower levels, because you'll be stuck in that trade for weeks, possibly months, if you get in too early, and it's just boring and it's frustrating. Going across to softs and grains, sugar, we're still long. A good rally yesterday, but gapping down and dipping down again today. Cocoa, we're still short. Nice move down yesterday. We have a 1 up, 1 down. My favorite pattern, take note, 1 up, 1 down. It's a reversal pattern against support, top of the range. I love it. I'm very happy with that trade. And if that keeps moving down, we may have the opportunity to add more to our winning trade. And then on coffee, we're also short. Various short tranches here. That was a hedge. We got short at the top here, took profit, and started reselling at these last 2 tranches. And now both of these are in profit. So that's looking pretty good. I like that very much. And then corn we're long, cotton we're long, orange juice, no trade, wheat we're long. Nice moves up on all of these, by the way. Soybeans, we took profit at the top there. And sugar, well, it's just flailing around. Sugar trades very much in line with oil. Sugar provides a substitute fuel in the alcohols, ethanol, methanol, that sort of thing, and it's cheaper. So as the oil price fluctuates, if oil gets more expensive, people are more inclined to switch to sugar. And if oil gets cheaper, people are inclined to switch out of sugar, sugar-related fuels, ethanol, methanol, alcohol, those sort of things, all the various long-chain carbon-type oils, and they switch back into oil. So pretty much aligned, and quite a good correlation between the two. Oil prices have come down, sugar prices have come down. And that's all, folks. Have a great trading day. I'm still in Whitsand, and I'll be back on the weekend, back to my office. But in the meantime, please like and subscribe to this channel, and consider joining for $1 a month. There's a link below that says join. Click on that button and you can join the private members-only area on my YouTube channel. And also consider joining my private group. There's a link below here. Click on the link, check it out, see what you think. And if you're struggling in your trading, if you just need a little bit of help, and for an inexpensive amount of money, you can join my private trading group, and I hope to see you there. Take care.
Morning buzz, the market's live. Charts are crazy, watch them dive. Candlesticks, they never lie. Swing and sway and touch the sky. Buy low, sell high, that's the game. Find the trend and ride the fame. Bulls and bears, they all unite. Dance of numbers day and night. Swing, trader, swing, don't you stop. Catch the rhythm, make it pop. Don't get greedy, don't get mad.